Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
All right, so here's what we're going to do. We're going to take a look at some basics. Now, again, this might be really rewinding for some of you, but I want to emphasize that it's not as much the definition that we're pulling out here. Anybody can talk about a definition. It is what you do with the definition that makes the difference. Now, I noticed that looking ahead to some of the upcoming webinars, there are some good webinars that ICE has coming up where you're going to take this and take it along a little bit further. You're going to take a look at specific patterns. We're going to take the definitions and plug them into patterns. This is what you want to do with them. It's not just, is a green candle mean it closed higher and a red candle means it closed lower? How does this fit into the big picture of the puzzle? But in order to do that, we got to make sure that everybody's running off the same starting point. A lot of what we use is going to be candlesticks. So very quickly, do a quick review here. But please, if you need to stop and throw the brakes on for us to review something again, that's not a problem. Basically, you're talking about 4 prices on a candlestick. You've got 2 what we call the bodies, the red body and the green body. These bodies represent the difference between the open and the close. But you also have shadows. Sometimes the shadows aren't there, and we'll talk about what that means. But if there are shadows, for instance, the top shadow here, that represents the high. If this candle were for a single trading day, that means at some point between 9:30 and 4 o'clock, the highest trade price of the day is up here where the top shadow is. So I know where the high is based on the top shadow. Likewise, if I look at the bottom shadow, I can find out where the low is. So this shows me the range. This shows me this is a snapshot of volatility. If there's a very tight difference between the top shadow and the bottom shadow, that tells me that volatility is very low. If there's a wide swing between the top shadow and the bottom shadow, that tells me that volatility during that period is very high. See, I could go in and I can look at historical volatility, and I can look at implied volatility, and this is where we go, do you want the numbers or do you want the picture? Well, there are times when the numbers might be helpful, but for the most part, I'd much rather start with the picture. Why? I could glance at this and get a very easy, quick snapshot of what's going on just by looking at this. Long shadows, high volatility. Short shadows, generally low volatility. Makes it a lot easier for me. Then I can spend my time looking at the story. And the open and the close, I said that the body represents the difference between the open and the close. On a red body, the open is at the top and the close is at the bottom. What that tells me is that the sellers are in control for that day. How do I know that? Because the only way for the stock or for something to close lower than it opened is if the sellers are able to push the buyers back, and throughout the trading period, the price gets lower and lower so that it closes down at the bottom. On the flip side, on a green body, that tells me the buyers are in control. How do I know that? Because they opened it someplace, but then throughout that trading period, the buyers were able to push the sellers back. They have the stronger momentum, and they end up closing it higher than it opened. Now, this part is pretty straightforward. I mean, pretty much anyone can grasp this whole idea of the open, the high, low, close. It's now when we start, like I said, we start to fit it into the puzzle where it starts to tell us the story, where it starts to give us the information. For instance, if it's a very long body, if the green body is very long, what that tells me is that there's a big difference between the open and the close. What does that tell me about the strength of the buyers? Well, in order for the buyers to advance the price that much of a distance, they've got to have quite a bit of strength over the sellers. So that's a piece of the story. On the other hand, if the body is very small, which is what we refer to as an indecision body, sometimes you might see that referred to as a spinning top or a doji. These are just names of various types of formations in the candles. That's indecision. What is indecision? Well, that means that the open and the close is very close to each other, indicating that the buyers and sellers are kind of at an impasse. There's an equilibrium of sorts. Neither the buyers nor sellers are able to advance and gain a lot of ground. Now, if that happens at the top of an uptrend, let me just throw this out to you. If you see a strong green candle, strong green candle, strong green candle, and then all of a sudden you see a spinning top, that's the name of a small body with relatively equal shadows on the top and bottom. You see a spinning top. What is that telling you? Well, what that tells you is that in the face of an uptrend, the buyers no longer have the strong momentum that they had. They have indecision. Now, does that tell us that the sellers are in control? No. That tells us the sellers have a possibility of getting control because there's a window of opportunity there. But it also might be that that the buyers are just taking a breather, and they may be coming back. So, please understand that in this short time that we have today, we're not able to do a comprehensive review of all the various candle patterns. As we get toward the end of today's broadcast, we're going to tell you about some of the what next steps you could take so that you could follow up on, in some educational resources. But the point here is that you bring back to the basics and don't get so hung up with the textbook definition of, what constitutes an engulfing pattern or a hanging man or a shooting star or a rising threes. No. Take a step back and ask yourself not what is the definition, but what is the story that's being told here. Sean, let me hand it over to you here for a second. Let's talk about a pattern that shows up a lot, which is the engulfing pattern. Now, this one just happens to be a bearish engulfing, but one of the key reversal patterns that we like to look for.
Absolutely. And Rick, one of the things I wanted to point out while you were discussing just the general overview of a candlestick pattern is that when you're looking at a candlestick pattern on a stock, now if you look at the market right now, the market is basically, moving and twitching on any kind of news that comes out, anything positive, and all of a sudden, we're seeing a 1 or 1.5% move in the Dow and the S&P and the NASDAQ. The next day, any negative news whatsoever, and we retrace all of that movement at all, it's back and forth and back and forth. So, don't be surprised if you're new to looking at candlesticks if you're not seeing this red, green, red, green, red, green. Well, how is that going to help you in any way, shape, or form? It's really not in that case because the market's been too back and forth. But one of the beauties about currencies is that the fundamentals that drive a currency pair, it's not based on did BP get the oil well cap, did this earnings estimate come in a penny above or a penny below. It's not these kinds of small things that drive the currency markets. They're big things. Gross domestic product kind of things, central bank intervention, is the federal bank increasing rates or decreasing rates. These are the kinds of things that are released on a quarterly basis, on an annual basis, or a biannual basis. So don't be surprised when you switch from looking at candlesticks on something like Yahoo or Google and start looking at something like the Aussie dollar, start looking at these, that you're not seeing more consistent candle patterns because the trends seem to stay longer because the fundamentals that drive them are slower than the kind of thing that drives the typical equity market. So taking a look at this bearish engulfing pattern here as an example. Let's say this was on a currency pair, and I was looking at one of the FX options. I wouldn't be too surprised to see this kind of a pattern right here. What we've got is 3 days of the buyers, of the bulls, being in control. Now, on the very first one on the left-hand side, you can see that basically it opened the morning at the low point and it closed at the high point of the day. That tells you that going into the riskiest time of the day for really any trader, the riskiest time of the day is not the open, because you can always back out of a position that you entered in the morning an hour later. The riskiest time of the day, of course, is when you enter the closing session, and you're going to have to hold on to that position overnight. Even though we're talking about currencies which continue to trade globally, when you're looking at something that trades on the U.S. market, like the FX options, that closing time is really where the risk is, because you're not going to be able to close the position, of course, until the next day.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.